today, and Britannia reported its second quarter numbers. Soggy quarter coming in for Britannia because consolidated total income beat the estimates by a whisker, coming in at 2,456 crore rupees. The net profit of Britannia at 234 crores, though failed to top the expectations. Similar picture with the operating margins as well. That number is a tad shy of the estimates at 13.8%. And the company has blamed the deteriorating geopolitical situation and also forex fluctuations for the hit on growth. So that's the synopsis, but let's take it straight across to the Managing Director of Britannia, Varun Berry, joining us now exclusively on CNBC TV 18 to throw more light on the numbers. Varun, so good to have you on the show. Can you break up the revenue growth in terms of volume as well as price for us?
So if you look at the total consolidated number, the volume growth is just over 7%. So pretty solid volume growth. And if you look at our core, which is, biscuit, cake and rusk, there we've had a double-digit volume growth. The volume growths actually have been diluted because of a double-digit volume decline as far as bread is concerned. So after that issue happened to the smaller bread players, about potassium bromide, bread, the industry hasn't recovered till now. So there was a double-digit volume decline on bread, and the international business is also in negative territory as far as volume is concerned, which is what's pulling our volume growths down to about 7%. But the core business is very robust, and even overall, I think 7% in the current circumstances is a pretty robust volume growth. We've got 4% out of, we've got 4% out of price increases. Actually, what's really happened this quarter is that we were absolutely taken by surprise by the kind of inflation that we saw. So we've seen a 12% inflation. Now, it doesn't mean that 12% is going to continue, because what's really happened is last year there was a hugely deflationary trend, and this year there's been a inflationary trend. And if you compare it versus last year, there is a 12% inflation, and we had prepared ourselves to start with a 4% inflation, and then we'd said, okay, maybe when we got into the beginning of the year, we said maybe it's looking more like 6%, but we certainly didn't budget for a 12% inflation. And so we did some corrective actions. We obviously accelerated our cost savings, we took some prices, but we haven't been able to fully wipe out, the deficit as far as the inflation that we got in our business. But we are on the way, because now we know what the inflation is going to be like. I think it's going to be overall inflation, double-digit inflation for the year, over 10% inflation for the year. So we are prepared for it, and we've made sure that we put in all the action plans to, mitigate that.
You're sounding very confident about mitigating the inflation pressures that you're going to see. You've been saying that the costs have increased higher than anticipated earlier, and you've increased the forecast from 5 to 9% to double-digit now. How do you really tame the beast? Rise in prices is expected now to offset the raw material costs?
You're absolutely right. We are as surprised as you are on the inflation numbers. But clearly, I think, see, what happens is when you have an inflationary trend which is palpable and you can see it come, you're able to prepare yourselves a lot better. This has, this certainly was beyond what we'd expected, and hence we were caught by surprise. But we are prepared now. We know that it's going to be that kind of a number. So effectively, we've taken, if you look at our run rate, we've taken about a 6% price hike. So it didn't flow through the entire quarter, and that's why it's looking more like 4.5% for this quarter. But we've already taken 6.5% kind of pricing. As we go forward, I think we'll have to take a little more than that, but we'll also have to intensify our cost-saving programs.
All right, so cost cutting and some price rise. So what does that mean for your margins, Varun? Can we see 15% margins this year?
Well, I think we, at this point in time, we would like to protect our margins to where we were at. I don't think we are looking at taking these margins up. So I think protecting our margins to last year's levels is going to be our endeavor as we move forward.
And what about the growth that you have seen in both the markets, rural as well as urban, in this quarter?
So the urban business is a single-digit growth, and the rural business is a high double-digit growth. And if you were to segregate it even further and look at the Hindi belt, as I've been speaking about for many years now, the Hindi belt growth is 18 to 20%, which is giving us a lot of confidence that once we decide on embarking on a certain path, we are able to turn that around. Feel very good about the growths that we are getting in the Hindi belt.
So can we expect a double-digit volume growth in FY17, Varun?
Well, our endeavor will always be to accelerate growths. And this quarter, while on a consolidated basis, we've not seen a double-digit growth, but the core business is double-digit. Let's hope for the best. The industry seems to be picking up a bit.
All right, so the industry seems to be picking up a bit, and inflation worries really surrounding Britannia. Thanks so much, Varun Berry, for throwing more light on your results, and all the best for going forward as well.